Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. So ARK Invest have just released the long-awaited update for their 2025 Tesla price target. Their previous target was $1,400 for 2024 post-split price. Their update is now $3,000 in 2025. So let's go through it. The $3,000 price target is actually their expected value. They also offer a bear case of $1,500 and a bull case of $4,000, each of which they've assigned a 25% chance to. ARK have presented a table with various factors and compared them to what we saw in 2020 and the bull and bear case. They haven't actually presented the expected case, however, but I guess we're looking at somewhere in between, perhaps more on the bullish side. So for cars sold, on the bear case example, they're showing that they've sold 5 million cars, and in the bull case, 10 million cars in 2025. Personally, I can't argue with these. I think the actual cars sold will be within this range. For example, if we're expecting about 250 gigawatt hours of batteries from Berlin, then that alone won't be far off enough batteries for 5 million cars, and probably expecting similar battery production in Texas. This might be around the end of 2023 or 2024. As for the average selling price, judging by these numbers, it sounds like they're basing a lot of the bull case on the success of the $25,000 Tesla, as the bull case has the average selling price at a much lower figure. Just some quick math. If the average Tesla is $50,000 in 2020 for the S, X, 3 and Y, and I wouldn't expect the price of them to drop particularly much, not to mention with the Semi, Roadster and Cybertruck increasing the average price, then if we maintain an average of $50,000 for all models except Model 2, and say the Model 2 is $25,000, then at ARK's bullish $36,000 average, they're saying that half of these sales are $25,000. I think this number is far too low. For starters, even if half the sales are the Model 2, then it's a big assumption that they'll all cost $25,000. I'm sure there will likely be a longer range, high-spec version for $30,000 too, for example, not to mention other optional extras. Okay, I know ARK have people much more credible than me working on this, but I simply can't see the average being this low. Revenue obviously is just average selling price multiplied by the number of sales, and this all checks out. So they have the bear case for insurance making more money than the bull case. Not quite sure why they would do that. Maybe because they think insurance for ride-hailing would cost more, and if you're in the robotaxi fleet, then you won't pay insurance? Doesn't make much sense to me. But Cathie Wood has been vocal that Tesla should start an Uber-like ride-hailing service before they get into robotaxis. She thinks this would be good for the business, and has added it in the bear case. As far as I can tell, Tesla have never so much as hinted at the idea, and I don't think it's something that will happen. I think her thinking is that it's feasible because the drivers save on fuel, but they still have to purchase a relatively expensive Tesla compared to a cheap 5-year-old Toyota Prius that already costs very little to run. This product idea just isn't going to work, and the cost of rolling out the infrastructure would be huge anyway, and then only to have to redo it again for robotaxis, and they already have enough to do. This will not happen. Autonomous ride-hailing is just another word for robotaxis. They're saying $327 billion in revenue in the bullish scenario. So in this scenario, they also say that 60% of Teslas will be used as robotaxis. In the full spreadsheet, we get more data, and we can see that they expect 22 million total Teslas on the road. So 60% of these equate to 13 million robotaxis. Now, in the bull case, they have each robotaxi doing 130,000 miles a year. So with 13 million cars, that would be a total of 1.7 trillion annual miles. And with 327 billion a year revenue, would equate to a revenue of 19 cents a mile. So for electrical vehicle gross margin, the bear case has a much higher margin on a much higher selling price, 40% for bear and 25% for bull, which is also kind of strange. And as they haven't included the annual gross profit, we can work it out ourselves for this data. Bear case has $234 billion of revenue at 40% gross margin, comes in at gross profit of $93.6 billion on cars, and the bull case at 25% of $367 billion revenue from cars comes in at $91.75 billion. So they have their bear case making more gross profit on cars than their bull case. But this lack of income is obviously more than made up for with their robotaxis revenue. So perhaps it's possible they're making such low margins on cars because they're not selling them to the public and keeping some for themselves for robotaxis, hence why the insurance is much lower. Or that all the $25,000 cars that Tesla sell will be used for robotaxis. Enterprise value to EBITDA. Enterprise value to earnings before interest, tax, depreciation, and amortization. I mean, seriously? Okay, this isn't quite the same as a PE ratio, but it's not far off. I'm not sure why they couldn't have just said PE, so we can understand it a bit better. The EBITDA is just an extra bit, but perhaps if we want PE ratio, it might be closer to an extra 10 than this figure. In other words, we're dealing with a PE ratio of 25 for bear and a PE ratio of 30 for bull. I could go deeper into these numbers here, but it'd probably take a whole episode. Either way, I'm sure you will agree that this is absurd and expected to be much higher by 2024. They factored in 50% total gross margin for the bull case. Now, this is even more crazy, but it gives us enough numbers to calculate what commission ARK are expecting Tesla to take from their robotaxis. So total revenue in bull case is $367 billion from auto revenue and $327 billion from robotaxis, which combined is $694 billion. So at 50% gross margin, that comes in at $347 billion gross profit. Now, we already calculated their gross profit from autos at $91.75 billion. So if we subtract that from their total gross profit, we're left with $255 gross profit from robotaxis, which means they're expecting to pay out only $71.75 billion to robotaxi owners, or around 28% commission. And with 13 million robotaxi owners, that would equate to them each receiving $5,500 a year, and that's before any costs, which on Autonomous Day we were told would be about 18 cents a mile. At 130,000 miles a year comes to $23,000, implying you would lose about $18,000 a year by putting your Tesla in the robotaxi fleet. Why haven't they done the numbers properly? In my opinion, I've actually lost a lot of respect for Cathie Wood, Tasha Keeney, and ARK Invest through this report. I do not hold any ARK investments myself, and have managed to personally beat their returns by about threefold with my own investments, being just Bitcoin and Tesla over the last few years. This report simply does not add up, and it's not an accurate analysis of how it can happen. In addition to that, they didn't even add anything about energy or heat pumps in it. The only way it possibly makes sense is if the 10 million or so cars that were sold in 2025 are all robotaxis for Tesla. Then the numbers might actually work. Obviously, the margin is 0%, the selling cost per car is significantly lower, insurance income is a lot less because no one is paying for it, but they have in no way indicated this would be the case in their report. Don't be too surprised if they miss this target. It looks like they missed their last target too. I mean, they estimated 1,400 for 2024. I'm sure all of us here agree we should see well past that in 2022 and hopefully double that by 2024. The plus side is that most of the market will look at this and just read the forecasted number, and it probably will move the needle a bit for the Tesla stock price. I watched quite a few of Cathie's podcasts, and I've actually seen her get quite a bit of her information wrong about Bitcoin in the past too. Honestly, no offense intended to her whatsoever. I think she's a very smart lady and has clearly done very well. But it's always important to do your own research, no matter how much credibility anyone else might have. I mean, just look at all the credible people that were wrong about Bitcoin too. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.